So, hi guys, we're back with yet another video of reading the market as a beginner. So, the last time we discussed in the first chapter that there are two major two major states in the market. One is a trend and the other is a trading range. I explained how with a very visual eye you can see how a trend or trading range is. A trend is obviously when the market keeps on making higher highs, higher lows, higher lows, right? Obviously in the bull trend. And a trading range is when market is ranging between two major levels without breaking out, and either the upper becomes support and the lower becomes resistance, right? So obviously within a trend there can also be a trading range, and within a trading range there can also be a trend. So we'll discuss that in later chapters, but first we'll start with this today, that we're going to discuss trends, right? We're going to see how a trend has three major layers, paths, or modes, right? So the first is breakout mode, the next is a tight channel, and the next is a wide channel. These are the three states that the trend exists in. Okay, the most strong one is the breakout mode. This is the strongest. This is a little less stronger, and this is essentially a weak trend. It is still a trend, but it's a weak trend. So in breakout mode it will give you only opportunities to go with the trend, so buy or sell, right? In this it will most likely still give you opportunities for only buy or sell according to the trend, but it still might have minor moves on the other side. But in a weak trend it might give you chances to trade both sides, right? So we're going to look at that today. We're going to see two different charts. One is of a Nifty, right? Nifty is the Indian market index, and the next will be of Nasdaq. So Nasdaq is the US market index. Essentially you can pick up any asset and they'll all be the same, right? So I'm going to show you how all of these work, how they've worked out, right? So let's look at it, right? So in this chart, right, let's pick up a random day. Let's not look at this day, the recent day, right? Let's say this one, right? So this is this right here, right? This section right here, what would you call it? It's a trend. It's a bear trend. You can clearly see the market going down. Now where did the trend start from, right? The trend started from right here. You see no high of the bar is breaking the high of the previous bar. So what is this? This is a clear breakout mode. Till here this was a clear breakout mode. Here came the first pullback to the previous bar. So this is a tight channel. Actually this is a very tight channel, right? But it's still a channel nonetheless. Then we have a channel breakout. This is how you see these structures. After this breakout, what does this happen? See, look, this is a small pullback. What does that make it? That makes it a tight channel. You can see this and you can mark out this. This will help you identify where the trend is also overextended. So see, all this while here the trend was overextended. It could have come back to two legs, right? It could have either gone here and then had two legs and then moved down, but essentially that didn't happen. Then what happened? After this complete trend, after this overextension, the market was in a trading range. This is the trading range, right? And after that, market broke out again. Again, similar thing. Tight channel happened here. Market is in a breakout mode, pull back. Now it makes another tight channel right here. This is the tight channel right here. The market moves within this tight channel for an elongated period of time. The market breaks out, makes a slightly wider channel right here, and it still continues to move down. You can just look at the market and look at these, and all these three have different ways to trade, right? So let me show you another example, right? I showed you an example for a breakout mode. What do you do in a breakout mode? You sell. In this area you would sell, in this area you would sell, in this area you would sell. You'd be great and making more money if you sold rather than if you bought, right? That's the way it works in the market. You have to be with the trend. It's not because trends don't work, like, or reversals don't work. They do work, but you need enough of a context for that to have a counter trend trade, right? And to make money out of it. You can take the trade and probably you'll exit on a small loss or a small profit, but to actually make money in the market, get those longer trades, you need to be with the trend. Now I'll show you an example of a tight channel and a wide channel. Breakout happens, no pullback. This is the breakout. Market forms a tight channel. Tight channel. Market breaks the tight channel, one leg, two leg. Market forms a wider channel. Wider channel, right? Wider channel. So this is always how the market works. The market first has a breakout, then it forms a tight channel, and then it forms a wide channel. Then it either breaks out or does it or forms a trading range, and then the process goes on all over again. Let's look at Nifty for an example, right? So this is the 5-minute chart, right? Okay, let's look at it. Market has a breakout, pullback, forms a tight channel, right? Market forms a tight channel. Market can't really go to the low of the channel, breaks out, forms a wider channel. Market forms a wider channel. You can look at the wide channel. The wide channel moves, goes to the lows, has a breakout. Now what the market is in? The market is either in a wide channel that will move somewhere between here to here, right? Or the market is in a trading range and the market continues in a trading range. Then again, market tries to break out, can't really break out, has a couple legs down, then has what? A breakout. After the breakout, what does it get? It gets a tight channel. This entire phase is the breakout, though you can say that this is a very tight channel. Sorry, though you can say this is a very tight channel, this right here, and it has a breakout, so essentially a pullback, and then it forms actually a wider channel. This is the wide channel, right? This is how the market works always. If it's a true trend, if it's not just a pullback kind of a phase, right, then the market will first have a breakout, then it will have a tight channel, and then it will have a wide channel. The more you start identifying these in the market in all the different ways, right? So in any way you can identify this. Once you start identifying this, you can make more money because you would know at what point the market might reverse, because breakouts also lead to reversals, right? So let's look at it here. The market is in a tight channel right here. Breakout, this is a breakout, right? Breakout, continuation, failure. So you can say that this is going to be a good enough pullback. So probably you make money off pullbacks. One trend, two trend, pullback, forms a pullback. What does it do? Wide channel, forms a wide channel. This is the breakout zone for market out here, right? Though the market showed us 1 2 3 legs, goes down, doesn't do anything, breakout again, breakout, continuation, pullback. Like this is continuation, right? The market breaks out, pulls back, and forms continuation. Again, very simply, breakout, tight channel, can't reach the top, wider channel. The market goes down, second leg, and can't go up again. So you can say the trend is shifted. This is the way you identify what kind of phase is the market in. The market can either be in a breakout mode, in a trend, or it can be in a tight channel, or it can be in a wide channel. There is no other mode the market ever exists in. Maybe you don't see it as on the charts, right? Once you practice it a lot, you will start recognizing those all three forms of a breakout. Once you have that, then you actually know how to trade in the market. Do you need to trade in the direction of the trend? Can you essentially look for reversals? Obviously there are going to be some times when there is a breakout mode and then a clear reversal. That's a V-shaped reversal, right? But then you have to look at previous day for context, or previous, a couple of hours for context, because that will essentially tell you why did the market do what it did. So for this episode, the only thing you have to do is mark your charts out in a way that you can see the breakout mode of a trend, you can see the tight channel of a trend, and you can see the wide channel of a trend. This will help you a lot if you start marking out these levels, right? Obviously we're going to discuss how reversals happen, how all these things lead to trading ranges and everything, but first, this is the part of trends you need to understand. We're going to go in detail in each and every one of them, but this is the essence of a trend. A market is always in a trend in one of these three things, right? The more you start identifying it, the better your trades are going to be, right? Okay guys, see you in the next episode of Reading the Market as a Beginner. If you like my channel, please like and subscribe. And if you would like to see me delve deeper into any of these, just give me a comment. Take care, guys. See you in the next one.